get started with the show and a very important company that is there in the world of startups, Cars24. It's a company that is an e-commerce platform for pre-owned vehicles, and they recorded a bit of a modest growth in March 2023 but managed to curtail their losses. Now, my colleague Avanne Dubash actually managed to speak to the co-founder of the company and co-founder of Cars24, Gajendra. Let's go across and listen into their conversation.
You have managed to see this time around that there has been a pretty stellar growth this time around in your overall revenues. Can you just run us through the outlook, because there's been an 8% growth this time around. What has that been attributed to?
Yeah, it has been a fantastic year for the used car category. Year on year, we have been, able to organize the used car market, which has been historically, very unorganized. And consumers are gaining now confidence in, buying used cars. That was not the case before. So that's one of the reasons why used car category in general is, growing at much faster rate, even, better than new car sales. So coming back to Cars24, right, we have, FY23 versus FY22, we have been, our focus was on sustainable growth. We wanted to make sure that whatever revenue we make, every dollar spent is accounted for, and we can, we can improve on our economics. In FY22 to 23, our gross margins that increased from 3% to 11%. So that's almost 3.6x growth over there in terms of our gross margins. We've been able to reduce our OPEX, right? That OPEX over there, I would say the equal focus was on improving the margin, as well as equal focus was on, improving our OPEX. And few contributor over there that has, because of which we have been able to reduce our, OPEX was marketing cost. Cars24 has highest awareness in the used car category, and over and above, our strong, customer-centric, experience where, each and every customer who's buying and selling car from us is very, very much delighted and speaking to their friends and family on how easy it is to, do business with us. That is resulting into a very great word of mouth for Cars24, and that is also pushing our, growth story. So all in all, I think FY22 to 23 has been remarkable year for us. We have grown close to 10% in terms of revenue wise. However, when it comes to gross margin, we have been able to increase our gross margin from 3% to 11%, while, bringing the OPEX down significantly.
Right, and there's also, you've seen your losses narrowing from about 1,093 crores to 467 crore rupees. What can that really be attributed to, and what's the game plan to finally break into the black, to turn profitable and remain consistent at that level?
Yeah, so, like I said, our focus was on getting sustainable growth. And the reason why our losses has shrunk more than 50%, around 67% to be precise, that we have been able to automate and digitize a lot of processes internally. Like, as you know, we are in the business of buying and selling and financing of used cars. So there's a lot of processes that used to be manual process, which we have been able to automate with help of technology. So that's number one. A lot of automation has happened over the course of last 18 months that has resulted into reducing our cost. Second thing that has helped us, reduce our expenses or reduce our losses is that we have been able to price our cars very precisely. In used car, your ability to price cars correctly, impacts a lot on your, bottom line. Now, with the help of data science and with the help of millions of customers with whom we are transacting, we are able to accurately predict at what price this car can be bought and sold at, and we can maximize our margins at, and that also help us improve our margins, and that in turn, help us reduce our losses, right? And another part that actually also helped us is that, we have been able to also finance a lot of cars as compared to before. So currently the cars, the car that we are selling to the consumers, roughly 3 out of 5 cars that we are selling have Cars24 financing on it. So that what that means is that we are able to make additional revenue by giving loan to the consumers. And I'll give you a surprising fact that financing in the used car category is never heard of. If you go to the market, on an average, only 1 out of 10 customers is able to get financing, because this is the market where banks and other NBFC are not very keen to deal with. And while Cars24, that also has an NBFC arm, we understand this category very well, and we are able to also, calculate our risk far better than any other banks out there. So hence we are able to, finance a lot more customers as compared to what, customer can find outside the market. So these are all the factors that is leading for us to improve our margins as well as, reduce our bottom line. And hence, this is all translating into, reducing our losses. Just to give you some figure in financing, like while I was talking about it, that we have been able to, disperse close to 2,000 crores in financing till date. In financing from FY22 to 23, we grew over 100%. So you can see there's a huge demand demand coming from consumers, who wants the loan, are looking to solve for the affordability of the used car. So that's a really good sign for the category. That's a really good sign for the market. And I'm very happy that Cars24 is playing a front role over there.
Okay. There was also, an amount this time around with respect to the EBITDA. There was some intellectual property, a one-off sale transaction. Can you just walk us through that? What the details?
So Cars24 is registered in Singapore. The parent entity is registered in Singapore, and we have all the global entity of Cars24 are being run by the parent entity. Now there is a one-time sale that has happened from parent entity to Cars24 India entity, because Cars24 India entity is the oldest one in last 8 years. So that one of a sale has happened that has in a way that happened in FY22, which kind of in a way reduce our overall, I would say, losses. But that was just a one-off transaction. And beside this, I think we are, while we are on this topic, I also want to highlight that this same entity also operates, the Singapore entity also operates our business in not only in India, but also in UAE, Thailand, and Australia.
Right, and you've achieved that astounding 100% year-on-year growth this time around, and your disbursal growth has been pretty strong since the inception. What really is the factor that's leading to this, and how do you plan to continue maintaining this steady trajectory?
So what we have realized is that if you want to maintain the growth trajectory, right, we have to get a sustainable growth. Now, to achieve that, you have to make sure that your margins and your expenses are in check. Now, one thing that we are doing to improve our margins, besides improve our margins, is to sell more value-added services to the customers. Right? I give an example of a loan that we are financing close to 3 out of 5 customers that are buying car from us. But over and above, there are many smaller things that consumer really look forward to when they are buying and selling cars. That is insurance, FASTag, warranty, ownership transfer facilities. So there are so many value-added services that we can sell to the customers, which are really much needed in the market. That has also help us further grow our market as we go forward. Over and above, one thing that we know that if you want to grow, we have to really expand to the deeper markets in India. Currently, we are roughly present in 150 cities in India, right? And if we compare like to like Maruti True Value or Maruti, they are present in 2,000 cities in India. So we still have a long way to go to the hinterlands of India, to go to the smaller tier 3 towns of India, where we know that there'll be very strong growth and demand that will come for the cars in general. So we are yet to go very deep into market here in India, and I think in next few years to come, we'll really going to expand ourselves and expand our reach, and that is also going to help us or improve our top line. So we are very much bullish about the market here in India for a couple of decades to come.
Yeah, and having said that, you've exited markets like Indonesia and Saudi Arabia, and that to a certain extent helped you lower your costs. How have you reduced your overall employee expenses as well, which are down nearly 13%? And what does it mean for the company having reduced these substantial costs with respect to the export component?
Yeah, I think coming to the human capital, right? Like I was giving an example earlier, that we want to do more with less. And we want to leverage technology and automation wherever we can, right? So by focusing on these two principles, we have been able to automate a lot of processes. Now, when you automate or digitize any process, what that helps you is that you can scale by, at much larger scale without adding more human capital to it, right? And you can do more with the people what you have already with you, right? So these are the one core thing that we are employing. So any business, any new service, any kind of process that we right now launch within Cars24, we want to make sure that those are automated from day one. Those are scalable from day one, rather than using the manual process, which later on turn we realize that okay, it is adding to a lot of costs, and we really need to automate it. So we are taking the proactive approach over there, and trying to use technology at each and every step, each and every idea that we are making into the reality. Now, coming back to the export market. So export market, our current hypothesis is that we will continue to expand and go deeper into the market that we are present, which is Thailand, Australia, and UAE. Now we'll continue to gain more market share over there. Those markets are relatively new for us. Like India, we have been into existence from last 8 years. While these markets are less than 2 years old, we still have a long way to go over there. We still have a lot to learn over there. However, by using the playbook of success that we have built in India, we are very much confident to gain the market share and become market leader over there in years to come.
Okay, and give us a sense as to what the outlook is when it comes to the reports of the employees that were laid off. There was a cost-cutting drive taken in that front. What is the outlook now? I believe some hirings as well are taking place. Can you just clarify all of that?
Yeah, so I want to first correct that there were no layoffs. There was a natural attrition that has happened whenever a year and a half ago. So it was just a business as usual for us at that point of time. However, the news came out differently, so that's a different story altogether. If you see our LinkedIn, or we are constantly on hiring mode, right? Because especially the hiring is especially on in product and technology and data science. That's where we feel that investing more into right now for the future is going to help us in the long run. So we are massively hiring when it comes to product, technology, data science, and all of these hiring are helping into automate and digitize more and more process as we go forward. And that is the the one strategy that we have, and that we are going to really stick to for very long.
Okay. Thanks for that clarification. And I also understand that going forward, the likes of data sciences, AI, and tech has really been leveraged. How exactly are you looking to leverage that and increase your overall productivity for the company?
Yeah, absolutely. So to give an example, right, we have got a lot of car evaluators who go and check the condition of car, whether customer is buying the car or selling the car. Now, each and every evaluator will have a limitation on number of cars that can evaluate, because he has to travel to the distance of the customer location, where at customer's home or the office. Now, we can predict now with help of technology. I can optimize the route my car evaluator is going to take, so that it has to travel the least distance possible. So what that will help me is that one evaluator who was able to do, let's say, check 3 cars before, now can check 5 cars, just because he traveled less in the distance, and he traveled and he's able to connect with more customers in a day. Over and above, when let's say checking of the car, checking the condition of the car, for each car that evaluator is checking can take up to 30 to 40 minutes. It's right now the evaluator is doing everything on the app, where he's manually inputting a lot of data points that is required for us to evaluate that car thoroughly. Now over there, we are building intelligence where the evaluator doesn't need to spend that much amount of time, and a lot of details can be captured while the evaluator is taking pictures of the car. Just to give a very small example, if I'm taking a picture of a car from the front and back, I can automatically capture the registration number. I don't need to manually input those. When I'm taking pictures from the side, I can automatically capture the scratches, dents, what the car has. I don't need to manually input where the scratch is, where the dent is. So all these small details matters a lot when you're talking about, checking, thousands of cars on daily basis, and it, help us optimize our, resources massively with the help of technology.
All right. Thanks so much then for taking time out, giving us a deeper insight as to what your numbers look like, the cost-cutting plans, as well as how you're leveraging technology. Good to have you on board.
Thank you. Likewise.